Welcome everybody to Technical Division episode 6. Now if you don't know what Technical Division is, I'll give you a quick update now. Technical Division is a weekly series that we do here at the Trading Division, and we look over the technical pairs for the week to come and our predictions. We also talk about economic news and how that could have an impact on the markets. Now for this week, we're going to be looking at our trades, our two trades. For this week we had a Euro trade and a USDJPY trade. We'll be looking at those two and breaking it down, why we entered, what happened, what was the result, and was it due to economic news, was it due to an unfortunate event, was our analysis incorrect, what happened. We'll check that out and then we'll preview the week ahead, so you'll be all up to date for the week ahead with your chart analysis. We'll also check out next week's economic news to see whether there's anything going on and whether it's going to be a high volatility or low volatility week. Stay tuned for this video to see us analyse 4 to 5 different currency pairs in the Forex market and check out the economic news.
Welcome everyone to Technical Division episode 6. This is a weekly Forex series where we look at the technical analysis for the week ahead and also the economic news. So this week for the Trading Division we had two trades, EURUSD and USDJPY. Now on the EURUSD we had a stop loss and that was 56 pips. On USDJPY we actually gained 3 pips. It was kind of a break-even trade, but so that's how we did last week, and we're just going to quickly look over that and then we'll preview onto next week. So this is the trade we took on EURUSD. Our entry point was 119.023 with a TP at 1.20704 and a stop loss at 1.18462. As you can see, the trade never really came to fruition, and we entered it based on this area here, this area of previous resistance in this area back at the 1st of the month, maybe the 4th of August. We thought that would turn to support, and especially held off on that monthly level as well. We were looking for higher targets to create from here, to create a new higher high possibly, but it didn't come, and we got stopped out. We actually got stopped out by this candle right here. I'll show you now. This candle right here was a large candle, large bearish candle, and it stopped us out, unfortunately. And it's one of those things, we weren't too unhappy about this because, as I said to a lot of my students, you can do your analysis and you can have top-notch analysis and look over all the economic news, but sometimes the market just does what it wants and it's not what you want to happen. So therefore, this is how the trade played out, and unfortunately we took a stop loss on that. We're going to move over to USDJPY and then we'll get straight onto the new analysis for the week to come. As you can see here, we took a USDJPY trade bullish again. So you may be wondering why we took a bullish euro trade against the dollar and a bullish dollar trade against the yen. This is because check the correlation on my FX book and it was very, very negative. I think minus 50% on the 4-hour, minus 75% on the daily. So it looked all good to mix the two together. And as you can see, price did move up from this area here. We entered at, let's check that out, we entered at 110.022. Profit level was 110.899, that was 87 pips higher. Stop level was 43.8 pips lower, so we had a solid 2 to 1 there, risk reward ratio. And actually price did move up quite well for us in the opening few candles. We got to a high of 65.6. However, price did move against us after that, and we had to close out for NFP because that is our rule. We never trade during economic times, so I think it was maybe this candle here we actually closed out, and this was the NFP candle right down here. You can see it actually spiked all the way down there, so even if we held our trade we would have stopped that anyway. So it's a 3 pip loss, 3 pip gain, sorry, but you'll take that and move on. If I'm being critical of this trade, you know, the last trade I said that we couldn't have done much about it, we were a little bit unlucky, but this trade, we entered this trade because of the break of the trend line, as you can see there. And if we would have entered a little bit sharper down here, our target was 87 pips. If we would have entered down there, our 87 pips would have been met, and therefore it would have been a profit trade rather than a break-even trade. So they're the little things in Forex that sometimes are difficult to address, but I'm critical for this trade, but the other trade was a little bit unlucky. Okay, so let's move on to the previewing for the week to come, and we'll start with Euro. Okay, so with Euro, as we said, we entered that trade there based on this resistance level. So in the Euro, we've been coming up in a nice bullish move since the start of the year, but it's been a little bit quicker ever since April, and that's where this dark black trend line right there, the thicker black trend line, is from April, and this other trend line is from a little bit. Let me try and get in there a little bit more. Show you that. So there you go. We drew our point A and point B as we do in our course, and we teach to do in our course. We drew point A and point B, and then we drew another trend line which is a little bit steeper. And Euro continues in this bullish trend, so it's trending essentially faster than it was from April. From April to the start of July, compared to the start of July and now, it is trending faster in the second period than in the first period. So that's a good indication of the strength of this Euro trend over the last few months, especially since the start of July. Now, Euro reached a high of, I think that's about a 3-year high there, of what was the actual high? 1.20704 was the actual high, and we were coming down into this area here, and I marked this off in a red resistance zone based on this area here, coming across and trying to hold there. Now watch this. This is fairly interesting. So let's take off some of these so it's a little bit easy to read. Take off our trade. If you actually look at that there, look across, we drew the red zone, and it hasn't actually broke the red zone. Broke below the red zone, has it? This candle came down, this bearish candle came down, but 2 bullish candles continued up. Now, for Euro to start worrying us, what I mean by that is to start maybe a possible downtrend, it would need to break this trend line here. It would need to start breaking this area right there and moving down towards that other trend line. But at the moment, we are looking still bullish for this particular pair. Because it's the 1st of September today, let's check out what happened with the monthly candle for USD on a higher time frame. Okay, so let's check it out. Euro. This is the August candle. It actually finished bullish. Okay, that's interesting. And also what's interesting is this monthly key level, which we marked off from before, has it actually broken over it? So it's 119.092 and it's 119.031. So Euro actually broke and finished above that monthly level. And that's quite critical because I'll show you now. If it broke below, that means it would leave a large wick right here and it would be below the monthly level. Because it's broke above, it gives price a lot more impetus and meaning to go higher and to continue in that trend. As you can see, we've already had quite a big pin today. This is only one day for the month of September. We are expecting, so let's go back over to the H4 time frame. I would expect over the next week to see a retest of this zone in some form or another, whether it's a wick, whether it's a few candles, and then we would hope for more bullish movement from the euro. And the next target, of course, is our high point right there. Let's mark that off in red. Sorry, in blue. So that's our new target for the euro, to reach a higher high and then continue to reach new higher highs. So as I said, for the euro, I'd expect it to stick around this level, hold this area as support, this little cluster of consolidation, keep that range, hold it as support, and then continue up in its quest towards higher highs. So the target is higher high right up there. Okay, how does that sound for euro? Okay, right, let's move on to US dollar JPY. Now, we just spoke a few minutes ago about the trade that we put on. US dollar JPY, I'm very interested in this pair actually at the moment, because as you can see there, ever since mid-July, it's been trending very well, downtrend, clear downtrend. Sorry about that. So as you can see, it's been trending in a downtrend ever since mid-July, creating lower lows, lower lows, lower lows, and we've always been in this sell zone. So in our Forex membership course, we speak about trend lines and we speak about buy zones and sell zones. I'm not going to go over too much of it now, of course, but essentially this zone here is a sell zone, and as you can see, price has never broken above this zone into the buy zone. The last few days, however, we have seen a movement into the buy zone, and this sparked attention from me, definitely. And let me just show you. So this was our new lower high right there. So we had a lower high continuing down. This was our lower high, and then this was our last and latest lower high. First of all, we create a bearish engulfing. Then we retest and we put in another bearish engulfing. This candle here, I know is economic news. We move down again, create a lower low. This is the lowest area. This area here, it's the lowest. It's a lower low and it's the lowest point of our current trend. What we're expecting to do to continue this trend is to move up here, create a new lower high, and then create a new lower low as we have done in the past. However, Forex market, UJ didn't want to do that this time. What UJ did is to move up higher. Two big bullish candles moves up, And once we start retesting this zone, this is where we start to get interested. This is where my ears perked up, and we started to get interested in potential reversal moves. So the reason why I've marked that black line off there based on the lower high point, and as you might see, there's actually a blue line moving across there as well. And I mark that off sometimes because lower low points can make future lower high points. So let me show you what that means. So as we move down here, I'm just going to put LL as a lower low abbreviation. Lower low, lower low. So as you can see, it's lower than the previous low. Lower low. This is a lower low, and I'll mark this off with the little blue line, telling me that that's a lower low, and possibly it could meet resistance in the future, especially being an engulfing pattern. So a lower low, it touched that daily level, created an engulfing pattern. I was like, okay, so in the future this could act as resistance or support. Acted as resistance there, so that got me a little bit interested. There was a wick right there. That means a little bit of support. Moving across here now, market creates a new lower high. Engulfing pattern on this blue zone, creates an engulfing, retests it again. So this blue line acted as resistance. We created a lower high, we retested it. The market once again retests it. We break through this with this candle confirms the break of our lower high and the start of our uptrend. And then we have the break of our 2-month trend line. Okay. So I'm gonna check what time. So once this candle had finished, once to 2 AM, that's the candle we're looking at. Once that candle was finished, we should have been looking for a retest of the blue line and the lower high to get long entries, because we already confirmed with our 4-hour candle on our home base that we had broken. And this is the difference right here between a winning trade and a losing trade. I promise you right now, this is absolute gold dust. 2 AM, the market, as you know, on the 4-hour candle, a new 4-hour candle is created every 4 hours. So the 10 PM candle on the 29th of August began, and when it finished at 2 AM on the 30th of August, as you can see there with the red horizontal line, vertical line, it confirmed the break of structure on the H4 time frame, which is crucial because it's my home time frame. It says that it's broken the level of structure. So we are in an uptrend for USDJPY. Bearing in mind we've been in a downtrend for the last 2 months. Big news, that is. So now, at this point, it's the middle of the night, 2 AM, I'm fast asleep. However, market's still moving because 30th, what day was that? That was a Wednesday. That was Wednesday. Price moves down. It retests that level again. I'm going to remove this. It retests this level again. Right there, it's absolutely pinpoint accuracy. Look at that. Right in there. And it's gone. Okay, so that where you would want to enter there is 520, 525. As soon as it gets there, bang, you're in. Okay. However, as I said, I'm still asleep at this point. Price moves up. 8 o'clock, maybe 7:30. I'm aware of this at the moment. I make an entry. Yeah, I would have entered in this cluster here. So I entered in this area here. Haven't got the exact time. Somewhere in this area here, I entered. Obviously saw a little bit of a drawdown down to here. And then price moved up pretty well. Now, if I would have been entering around the yellow circle down here, which would have been optimal entry, I would have won this trade. Instead, I had to settle for break even, and that is the difference between a winner and a loser. And I'm not saying I should have been up at 5:30 in the morning, but maybe I should have predicted it better. Maybe I should have said, right, this candle looks a little bit strong as I was going to bed. Maybe it's got potential to break above. I'll show you that exactly what I'm saying in a few seconds. So I entered 34 pips above the optimal entry, and that's frankly not good, 34 pips above optimal entry, and those 44 pips actually resulted in. So let's take those 34 pips, and let's just say that. Let's just say that we were. Yeah, that's it. So if we were 34 pips higher, our TP would have been 34 pips lower, and we would have eventually, if you look across the line there, we would eventually taken our trade. So those are the fine margins in Forex. And what I was just saying there about checking, so I could have done a little bit more analysis on. Let me show you that. Okay, so this candle opens at. Let's just check. This candle opens at 6 p.m. and that was on the 29th of August. Okay, let's check that out. Okay, look at this now. 9 p.m. candle. Sorry, 7 p.m. candle right there. Comes up to really test that area. Now it's 7 p.m. 8 p.m. candle. Actually, at 9 p.m. there's actually a confirmation on the 1 hour that on the 1 hour time frame this structure had been broken. Now we don't look at the 1 hour time frame, we look at the 4 hour time frame, but it could give us a pre-warning indication that potentially the 4 hour time frame may be disrupted. As you can see here, we came back down, engulfed on this daily level, and we moved up, and there was our optimal entry as we retested. So those are the fine margins of Forex, ladies and gentlemen. Okay, US dollar JPY for the future, of course, for the next weeks to come. Let's have a look at our high time frame, because we have got a new monthly candle coming out because it's September 1st today. Let's check out what the candle was for August. So it's a bearish candle for August. Very small candle there. Interesting. So it's a small candle, a large wick right there to the downside. So this now shows me that we've got, on the monthly level, we've got April had a large bearish wick. June and also August. But you can also say that it had a large bullish wick for a lot of these as well. So that's quite interesting. So I think I said in one of the last videos that it's quite hard to look at US dollar JPY on a monthly and high time frame basis because we've got a lot of dojis and small candles in there. That's our fourth very, very small candle of the year, and that's quite a lot. This trend line actually drew this thick trend line. Bearish is actually a weekly trend line, and as you can see in this area here, we actually attempted to break out in mid-July, and we come back in here. Now, are we looking for more bullish movement from UJ? We've broken that trend line. Interestingly enough, what you usually do when you break a trend line is what usually happens. You get your optimal entry there. We break up, find a little bit of resistance. We actually pull back down. Sometimes we pull back and actually retest the trend line, but in this case here, this non-farm payroll candle today, right there, see that wick? This non-farm payroll candle pull back into daily support, and we continued up. So we've actually made our retracement for our trend line. We've put in an engulfing pattern, so I can only see one way up, one way for this, for US dollar JPY, and it is in a bullish direction. If we do break above, if we do move above our monthly, so that monthly level there of 110.700, if we do move above that, we could possibly break out of this weekly downwards trend line in the next few weeks. So maybe when I speak to you at the start of October, we may be speaking about bullish movement for US dollar JPY on high time frames because we've actually broken out of this area. Now, that is the potential. So this is the end of this weekly candle, this bullish candle, very, very bullish. So for US dollar JPY, I would say from here, moving up here, we may meet a little bit of resistance around this area. So I'm going to maybe pull it back a little bit there, move up, and then pull back, and then I'm just going to extend this up a little bit higher, and then actually pull up more to create higher highs. Because for me right now, we are in a bullish trend for US dollar JPY. I'm going to pull my trend line out, which I usually do at the start of a trend. Pull it out there, and that NFP wick, we can use that. Doesn't happen for no reason, you know. We can use that as a trend line. Put that in there, and then we'll have to slightly adjust our levels for so this actually shows there, before we even draw these arrows, this shows what kind of gradient we're looking at for our new trend, and it's a 47 degrees, which is quite high. So this kind of shows me that we might be looking at quick bullish movement. Move up to there, a pull back into that monthly level, and a push forward into new highs. Pull back into that monthly level and continue to make a higher high. So that's kind of interesting now. I'm going to leave that, might put that on Instagram. I'm quite disappointed about my trade there, but we are going to look for more bullish movement around this pair. A possible entry might be somewhere there, using that support, and maybe it touches the trend line as well. So for me, US dollar JPY is looking for an uptrend at the moment. I've got quite a cough today. Okay, so yeah, that's the kind of pattern we're looking at, and then we'll mark off a few other key levels as well. As I said before, there could be some lower low points. You could mark off one there, a few here for future support and resistance levels. Okay, so that's USDJPY wrapped up. Move on to the next one. Okay, the next one is pound yen. So pound yen, didn't trade this week. However, I did draw those 1, 2, 3 arrows here. I drew them last week, and you might not believe me for this, but it did exactly work out exactly how I said, but I didn't trade. Kind of stupid of me now, looking back at it, but let's just get on with the analysis. The reason I'll tell you the reasons why I did this, and then maybe you'll believe me. So I marked this off as a lower high level. I didn't put lower high, but I put that kind of red zone of resistance in, and I actually put in an engulfing pattern back then. So I knew that price kind of it wanted to come back and retest it at some point. We put in this lower high down here, a lot of choppiness, and we actually found a lower low, but we held on and we found a little bit of support on the monthly. I put this as a green upwards candle there, arrow, sorry. And the same has happened in terms of UJ. So you remember UJ? We just looked at it 2 seconds ago. It's been trending since I think mid-July. UJ was. This is the start of August, so this is basically a 1 month downtrend. Nice lower highs, nice trend line, everything's looking nice up until this point here. Well, kind of this point is the start of our uptrend. So that's, you can actually see right in that picture there, downtrend, 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 start of the uptrend. Okay, let's zoom in a little bit more and check that out. So once again, I'm not sure why I drew that this level here. I don't know, but once we broke this lower high, I was interested in bullish movement because we broke the trend line as well, but I knew that there was a bearish engulfing up here, and we had to kind of, if we wanted to look for actually a bullish trend, then we'd have to break this lower high here, which we actually have done in the last few days. So what happened when we came up here? Lower high, lower high, lower high, broke through first of all. You know when I said about the trend line on UJ, when trend lines, when they break, they tend to break and then pull back. The same happens with structure, right? So actually breaks out those 2 little candles there, bullish. They actually confirm the break, actually pulls back in. That's okay. Pulls back up, and what happens there? Pulls up, rejects the wick down. How many pips is that? 92. It's about 20 pips. So rejects it, which is expected based on that engulfing. So if you're a scalper, opportunity there, no doubt. Moves up here, and what does it do? Comes back, as I said there, pulls back. This would have been a very, very good entry, I've got to say. However, no, there's no however. There's no buts. That would have been a good entry. As I said, I haven't been trading GJ this week, but that would have been a good entry because what we're looking at now is, let's take our trend line tool out. Let's try and get a trend line. See, I'm looking at that one first of all, but what I'm thinking now is that it's quite far away, and GJ looks to be trending quicker than this trend line, but we can put that one in anyway, because the second one I'm looking at is from this wick to this wick here, and that's a quick trend. Do you know that's exactly the same gradient trend as USDJPY? Wouldn't you know it? So at the moment we're trending in a bullish market for pound yen. We're trading on a 47-degree gradient. She's very, very quick. and the gradient will change as you zoom in and out. But so what are we looking for now? What are the next areas of resistance? Let's say the next area of resistance for me is this level here. Not because it's a low high, because we're not in that anymore. We're not in the downtrend. It's because support always acts as resistance. And also, if you check that out, put in an engulfing back on the 7th of August, didn't actually retest it there. Tried again there. It didn't actually retest it. So that could be a key area. A little bit of resistance. Instead of marking that off like that, I'm gonna cancel. I'm gonna mark it off as a blue level, as a little blue line there, just so I know something's active in that area. It's 250, so 143 250, which is about 40 pips away. So that's kind of our next target, I would say. And for any other analysis, let's check out the high time frames, as we always do. I usually keep them on this kind of format, so I put my 4 hour, which is my home base, and also my high time frames on here. So I'll show you my high time frame. This is between daily, weekly, monthly. So I usually do a trend line, bit of support resistance and other things. So what I wanted to check out first is what happened with the monthly candle. Monthly candle in August was actually a bearish candle. Of course we know that, because we've had a very, very nice bearish downtrend over August. Bearish candle, bearish there. Okay. Move on to the weekly. Let's have a look if any action's going on. Okay, that's interesting. Okay. Let's move on to the daily. Let's check that out. Okay, so we put in an engulfing on the daily chart. That's kind of interesting. Over the last, this was actually a daily upwards trend line that we put in, and it started in October last year. Would you know? So it's nearly a year old. Daily trend line I put in, and this area here actually broke the daily trend line a week, 2 weeks ago maybe. So this candle actually confirmed it, moved down with a lot of bearish candles, and ever since then we've moved up bullish. We've put in a bullish engulfing there. So can we find any targets or any pieces of resistance areas in there? I would say that that blue line is the first area, and then we may possibly be looking at a move higher and a pullback, as we usually do, and a move up higher. The only thing I would be cautious of is this steep trend line here. So what may end up happening is you've got two trend lines. You've got one there and one a bit lower. So what I kind of see happening over the next few weeks, if price continues, is to be trading between these two levels. It's priced to be trading between these two levels. So I'm not sure what kind of shape that is, but it's kind of a cone, like an ice cream cone, if you want to call it. And the candlesticks, if you want, can be the ice cream inside. So it's going to be all inside there. And if price does actually break through this first trend line, don't be surprised or worried if it does, because it's a very steep gradient. Just keep structure and other things, but that's kind of what I'm looking at right now. as I said, this level of 143.250 could act as a little bit of resistance and then possibly a support level. So we are looking for GJ higher levels and new higher lows created. Okay, this is the move on to the last piece of Forex analysis for today, which is AUDUSD, and we're going to be super quick with this one because honestly I haven't really got much to say. I drew this arrow last week, I think, in technical division. It hasn't really got up there, and for me this doesn't look very nice. Started off, see this cluster of green upwards arrows I've drawn here. Started off with a high low, moved that down, broke the high low. It hasn't broken the trend line. That's the only thing we can say. It hasn't actually broken the trend line from back in June. But for me, it is not far from breaking this trend line now. It cannot be far from breaking the trend line and moving to the downside. This weekly could act as a resistance. But what I would be expecting from AUDUSD now is to touch that weekly level again and to move down and possibly pull back as we do usually, and move into a downtrend, because it tested this level once, tested our trend line since June. Was that the first time? Let's check. So the first, yeah. So our first point was in June. Our second point was in mid-July. It's actually tested it for the first time. So that point A and point B. We tested it for the first time a few days ago, 31st, so yesterday, and that's what I would be expecting. More bearish movement to come from this pair, because it doesn't. I don't think it has the strength to go any higher. Just want to double check on the AUDUSD higher time frame finally, and then we'll get onto some economics. Let's check out, because we did find that area of 2-year consolidation as we did for the euro, but the euro did break out into a bullish trend. I think what's going to happen with AUDUSD is it may well creep back into that trend. Maybe wrong, but for me it looks like it may creep back into that trend for now. We put a bearish candle in August. It's not too bad actually, that bearish candle, because it's not too big. It's kept between our levels. Possibility for an engulfing pattern, we'll see. And there is possibility, because we are currently in a period of highs since 2015. This is a weekly resistance area here, so I'll give you this right. Weekly resistance of 0.8035345. It's based on this engulfing back in 2015, right? And we have 2 tests on it so far. We've had a 1 and a 2. These were the 3rd and 4th weeks in July. So we tested that and we rejected it twice. So maybe that assumes that, maybe that says that this level is becoming weaker, possibly. But yeah, I mean, this would be an area, possibly the 0.08019, a possible resistance area on the daily. But for me at the moment, AUDUSD, it's not making any decisions. So when charts don't make any decisions, I tend to not make any decisions, because, you know, I've wrote these arrows out here, but it could surprise us all and move up higher, gain a little bit of strength, because if it breaks above this weekly candle, weekly level, there's no reason why it can't go higher. Just because it rejected it twice back in here doesn't mean it can go higher again, because it's weakened it a little bit and it could go higher. So we'll just have to wait and see. It's a little bit of a wait and see policy for AUDUSD, for me anyway. Over the next week, As I said, if it gets near this weekly area, we'll keep an eye on it. Right there, if it gets near that level, we'll keep an eye on it, and we'll check out whether it wants to break the trend line or move higher up. So no predictions, I'm afraid, for AUDUSD at the moment. We'll maybe make them next week, so we'll have a better understanding. Okay, so that's the technicals wrapped up for this week, and I'm going to check out some economic news. So let's see what's going on next week, Monday the 4th of September. Pretty quiet on Monday. Unemployment change in Spain, which may affect the euro slightly, but there's no worries there. Okay, what's this here? We've got the RBI, which is I want to get this right now. It's I'm going to say Royal Bank of Australia. I'm not sure they're the correct words, but anyway. Interest rate decision. So this is pretty important. So 5:30 GMT time. So if you've got any Aussie pairs on, just talking about the Aussie chart, actually, this RBA interest rate decision and the statement may give us a little bit more insight into where it wants to go. So say, for instance, if the interest rate decision is positive, it may move up above that weekly, look for a retest, and then we can enter long. If it's negative, we might see a break of that trend line. So this might prove interesting on Tuesday morning. A little bit more news on Tuesday. Got the inflation report hearings in the UK. It says high impact, but it's not really. Nothing happens then. Wednesday, another inflation report hearings. Trade balance. This is fairly quiet, actually. I'd hold all trades. Apart from the Aussie trades on Tuesday morning, I'd hold all of the trades over this time. Thursday, we've got the trade balance on AUDUSD. Again, fairly quiet week. We've got GDP. This is a little bit bigger now. On Thursday, the 7th of September, at 10 AM GMT time. So this is a little bit bigger. So what I would say is stay out of any euro trades on Thursday, the 7th of September. If you have any close amount before 10 AM GMT, got the GDP. Consensus previous is exactly the same as consensus, and the same with the interest rate decision. So we've got some big things coming out there. And then we've got a monetary statement, policy statement, and the press conference later on, just to talk about probably the results of the interest rate and the GDP results. Friday, current accounts for the yen. Probably won't have maybe a 10 to 15 pip difference for those results. Not much really. And we come down, consumer inflation expectations. I think that's about it, is it? Yep. Okay, so we've got a fairly quiet week next week, I've got to say. The only thing is stay out of euro trades on Thursday. Okay? Cool. So that's pretty much wrapped up for this week. I will put some trades up on Instagram, and I'll show our progress over the week, and I'll show our results at the end of the week, as we do always. So we're going to start showing our results every single week, and I might make an Excel spreadsheet or some sort of graph that we can show our pips or our movement every week, and also different pairs. So I might do that. Anyway, thanks for listening to Technical Division episode 6. Be sure to join us every week for this monster packed Forex session, because it's been a pretty good session today. We've talked about quite a lot, so you'll be all ready for Monday morning, then the quiet economic week to come. Okay, enjoy trading for next week. Be sure to use this information, or use this information in correlation, in collaboration with your own trading, of course. And if you have any questions, please feel free to email me, or just hit me up on social media. Head over to information should be all on our website or on our YouTube channel. You should be redirected to anything you wish. Okay, thanks for listening to Technical Division episode 6. Signing out.